Hi, in this video, I want to showcase a new position that I've just opened on the SPX. The idea here is to expect some sideways action, and there's a substantial volatility skew between the two expiration dates for this diagonal spread, almost 3 points. This setup is a bit unconventional in terms of its expiration date because September 4th is a holiday, so the market won't open on the following Monday but on Tuesday instead. I found this opportunity using Ninja Spread. And there's a lot of event risk this week with the upcoming GDP, PCE, and NFP reports on Friday. That's why the implied volatility, IV, is considerably higher for the near-term expiration. The position has just been filled. You can see the screens here, and the diagonals went through at 1.30, so we'll see how it unfolds from here. Hey again, today is the 29th, and I honestly didn't expect SPX to spike this fast. If you look at this candle, we're already up by 1.25%, and it essentially blew past the short leg of my diagonal. I didn't plan for things to move this quickly, so I had to roll my position. Basically, I rolled my short from 4,475 to 4,490 for $1.40, which we're about to hit soon. I also moved my long leg from 4,480 to 4,495. Here's the screenshot. I was able to make this adjustment for 0.4. So yes, I increased the risk but perhaps improved my odds, as I am now profitable up to 4,540, which, if not a new high, is somewhere around here. And considering how strong the market is, we could easily get there by Friday, and it's only Tuesday. My lower break-even is now at 4,420, which is somewhere around here. I had to intervene because we really moved deep in the money here. There's still time, and one could hope for a turnaround, but this intraday green candle is pretty strong. When you look at the matrix, it just flew past and didn't look back. The next logical resistance could be around 4,490 if we look at the 4-hour chart. The market was ranging here for a long time, so that's why I rolled my short to 4,490 and not, say, 4,500. From a technical perspective, it could range here, but there are serious event risks this week, with GDP, PCE, and NFP reports on Friday. I wouldn't necessarily plan to keep it until Friday, although looking at it now, time decay still has some work to do, so I might have to keep it, unfortunately. As for how I can adjust this, the current price is around 1.45 to exit. I initially paid 1.70 per unit, so right now, I'm looking at a loss of around $100. So we'll see if this minor adjustment or rolling pays off. If the market keeps rallying, obviously, further adjustments or closures will be needed. We've had our all-time highs, or at least the current highs, so if the market goes completely bonkers, it could even get there in one go, though that seems pretty bullish to me. The sentiment seems to have reversed dramatically compared to 2 weeks ago, and not just a small reversal. We haven't seen a green candle this big in a long time. Whenever you see such a move, it's always good to look back to see if similar candles have appeared in the past and what followed. Sometimes it's consolidation, sometimes it's a sell-off, and sometimes it's a gap-up continuation. So it's a big question as to what we can expect going forward. Will this 4,420, 4,540 range hold for the next 3 days? We'll see. I'll keep you posted from here. Back again, it's the 30th today. And unfortunately, the situation hasn't improved. In fact, it's gotten a lot worse because they've continued to buy up the SPX. If I had done nothing, I'd be looking at a $350 loss right now. So, I had to extend the adjustments I made yesterday. When I rolled the strike up to 4,510, it was out of the money. But by the time the order got filled, it was unfortunately in the money. So, yet again, we're beyond the peak. And this time it cost me $85 because, as we get closer to expiration, the cost keeps going up. Here's a screenshot of the filled orders. These were closed, and these are open. So I've spent another $85 on this, and I spent $40 on the adjustment last time, so this position is starting to get expensive. Now my break-even range on the downside is at 4,450. If we look at the SPX option matrix, if they were to push the market back down, this is about the level they could push it to, and I'd still be profitable at expiration. This is still somewhat viable. On the upside, however, It's 4,557, which is around this gap level here. Well, they're buying it up really aggressively right now. This entire week has been pretty brutal. This is Monday and Tuesday, this is Wednesday. So the question is whether I can navigate through this at all. With a position like this, the question is not how much I'm going to make on it necessarily, but whether I can break even, because this move against me is pretty ugly. I started from 4,475, which the market has far surpassed, and it just keeps going, and it doesn't look like it wants to stop. So I'll continue from here. Back again, it's the 31st today. This position is starting to feel like a real struggle, because it seems like the market has no intention of stopping. If we look at the SPX matrix, I mentioned yesterday that it would be logical for it to stop here. But logic is one thing. The market doesn't always listen. There are multiple resistance levels here, and it should technically bounce back at this point after the breakdown, but it might not. That's why I had to roll the legs further out again. Yesterday I did an adjustment that cost me $85. Today I did another one for $80. I rolled the 4,510 strike up to 4,525 and the 4,515 to 4,530. Here's a screenshot of the filled order at 0.8. The more of these adjustments I make, the narrower my profitable range becomes. Now it's only about 80 points, from 4,480 to 4,560. My theta looks deceptively good, but it won't appreciate by $1,300 overnight. We saw big theta values yesterday, and it didn't affect the P&L. In fact, it deteriorated. Now both 4,525 and 4,530 are in the money. When I thought of it, they were out of the money, but now they're in. I could exit this entire position for 1.95, but I've already spent way more on it. So that's where things stand now. I'm hoping time decay will help, although the volatility skew and volume need to move in the right direction too. The PCE data came out today, and it was as expected at 0.2, no surprises, and the market didn't do much. Technically, I think it should bounce back here, but we'll see what the market does. I did the adjustment just in case it doesn't, because the deeper these short call vertical spreads get in the money without adjustments, the more they'll start to lose value. Even if I think it should go down, and I shouldn't need to adjust, I felt it was necessary due to the time crunch with only 1 day left. It's costly, but it's part of the game. Knowing Murphy's Law, the market will drop 100 points tomorrow, and I'll hit max loss. Hopefully that won't happen. We have a long weekend coming up, so trading will probably be lighter, although there's an NFP report tomorrow. So all I can hope for now is that the market takes a breather at this resistance level. But tomorrow's NFP could cause all kinds of movements. Most likely there won't be any profit by tonight, so it would be nice to close this at a slight gain or break even, although I'm not optimistic about that. I'll continue from here. Alright, here we are again. The market just closed. I closed out this position a few minutes ago because this situation is basically a gift, compared to where we were earlier in the day, facing a $250, 300 loss with this amount of contracts. So this helped a lot, since not much really happened today. I mentioned earlier that it would make sense for it to bounce from here, and that's exactly what happened. Fortunately, it didn't tank. It moved sideways. That's why the value started to go up. So, I was able to exit this at 3.2, ending up with a $30 loss. This is an ideal situation compared to how this position looked earlier in the day. If I had done absolutely nothing, I'd be in a $280 loss right now. If I had done just the first adjustment, hoping for a reversal, I would be in a $50 loss. With a second adjustment, I would have been in profit. The mistake happened with today's adjustment essentially because we didn't continue the move. This was a protective adjustment. So I ended up with a slight loss. I tried to get out at around 3.35 and 3.4 to break even, but that didn't really fill, and I wanted to get out of this no matter what. Because tomorrow is NFP, Non-Farm Payrolls, and NFP is always before the market opens. We are already in a very tight range here for tomorrow, between 4,480 and 4,560, an 80-point range. We might open the market at 4,450 if NFP comes out a certain way, or at 4,550, and then there's not much I can do. So if there wasn't NFP tomorrow, I probably would have left it open, because a 3-day holiday is coming up, and Fridays before such holidays are usually light trading days. And obviously, if I had waited this out, even if I wouldn't make $1,000, I could have made around $400, $500 tomorrow. But there is event risk. So you have to weigh whether you could potentially make $500, which is likely since the value will probably decrease tomorrow. But if we have a bad opening, you can lose that $500 and even more in an instant. So, I decided to exercise risk management and close out this position conservatively, because who knows what NFP will bring. Lately, the market hasn't been doing anything too interesting on NFP days, but it can always pose a significant event risk. So this ended in a loss after 3 adjustments. Hope this was useful. If you have any questions, feel free to reach out. Thanks for your attention. Bye.